IPOs could gain momentum in 2025 after a quieter than expected 2024, but we did have a few bright spots in the public market last year, including the IPO of Reddit and Astera Labs. Joining us now for more, we got Phil Haslett, EquityZen Chief Strategy Officer, to talk all things IPO outlooks. So Phil, I mean, is 2025, is it finally going to be the year? That's our big question as soon as you walked into the studio.
Yeah, well, we were talking about it earlier. First off, thanks for having me, but couldn't get much slower than 2024 or even 2023. So I think particularly in the tech sector, there's a lot of companies that are eager to test the public markets. I think the big question is whether the market will receive them, right? We've talked about some big successes. Reddit's been on an absolute tear. Astera Labs, ones that you've mentioned. The question is, for these other 1,200 unicorns, particularly the tech companies, it's kind of like, am I good enough? Like, am I ready to take things public?
It's not even about the unicorns anymore. It's about who's the decacorns, who's the hectacorn on the market. Where do you think the most poised and perhaps most apt to make a public market appearance are this year? Which names kind of rise to the top?
Yeah, well, the first thing I would say is you hit the nail on the head. It's not just, I have $1 billion valuation, I'm ready to go. You have to have the absolute metrics behind it, right? ServiceTitan was doing hundreds of millions of dollars of revenue. Rubrik was doing hundreds of millions of dollars of revenue, right? So these were $5 billion, $6 billion, $7 billion businesses in valuation. So first, that's kind of the mark I'd say. I'd say one that we keep an eye on is a company named CoreWeave. CoreWeave's a tech company that does a lot of the GPU computing, right place, right time for AI and data centers. So that's one that we're keeping an eye out for. A couple other names that we do talk about that are popular have actually solved kind of the liquidity problem, not through an IPO, but through other means. And those are names like SpaceX, Stripe, and Databricks. So I'd actually argue that those names are farther away from IPO than maybe others have expected because they've solved some liquidity internally already.
So there's not as much incentive to go public then. I want to circle back on the kind of computing names and talk about Cerberus in particular, which was on your list. And there was a lot of hype around it, especially around talk of the IPO, first coming out as this potential competitor to NVIDIA. Is that going to be the case?
So great name to call out because Cerberus is kind of this dream company name because it competes with NVIDIA, so it's going to get a lot of attention from not just institutional investors, but retail investors. But Cerberus also has a challenge in the sense that its revenue is heavily concentrated, I think, amongst one customer that makes up something like 2/3 of their revenue out in Dubai. And you couple that with the fact that they had to go through some type of regulatory approval. That IPO was announced, I think, a few days after the election, and we still haven't actually seen any updated filings. And so what I suspect is that maybe this was a name that investors on the retail side were really excited about, and some institutional investors said, well, just because you put your name next to NVIDIA doesn't mean you're going to be an all-star. So there's probably just a bit more digging, but pretty exciting name to keep an eye out for.
What about the raise? How much these IPOs are expected to raise as they start to show the public markets how apt they are to actually get into the space, especially considering how it's, like you said, not just about being a unicorn company, but also showing that you've got solid profit and your fundamentals can match as well.
So IPO sizes have grown over time, and so have the baseline metrics. I would say about 10 years ago, we looked for a tech company to have maybe 100 million plus in revenue, and now we're seeing numbers closer to 300, 400, or $500 million. As far as the actual IPO sizes too, the amount raised, things are getting up close to $1 billion at this point, probably raising $300, $400, $500 million. Now, some of that might be going towards liquidity for early investors or early employees, but the sizes have certainly grown. And so we expect that to continue. And part of that is because in the private markets, you can actually raise $100, $200, $300, $400 million at a time, right? So you actually have choices here. So if you are going to go big and go public, you're probably going to do it when you're a much larger company and you want to raise more money.
I want to talk about the venues as well, because it seems like in 2026 there's going to be a new venue here in the US and the Texas Stock Exchange that is backed by some major investors, BlackRock being one of them. And as we think about what that could mean for the venues that IPOs have to choose from, especially as some of their private equity market players have some influence in the conversation and that choice as well. What is that set to do for the decision of whether or not to go public now in this year versus in 2026, and some of these names potentially putting off an IPO yet another year?
Yeah, so at EquityZen, we've predominantly seen companies end up listing at New York Stock Exchange or NASDAQ. I think that's been tradition. But there's always probably some interest about doing things differently, particularly in the tech space, right? So we saw Long-Term Stock Exchange was something they launched a few years ago. They've been a bit more active on the private side. We've seen some new potential venues in 2026. I would say it's tough to shake an incumbent, right? It's tough to shake off the two-headed monster that's been doing all of these listings. It's really just up to the companies. But what I will say is that one thing that we saw in the last few years is companies do need to address liquidity. It's one of the reasons why we exist, right, at EquityZen. But we've seen companies address it in unique ways. Big tender offers, buybacks, delaying IPOs. So it wouldn't surprise me if these companies would be eager to try something that addresses liquidity a little bit differently than the de facto, IPO listing.